yeah, just looking at that next chart there, Chris, I mean, so far we're just, still using the roadmap there for the 60-year cycle. That's been pretty reliable so far. That's still sort of pointing, still suggesting we might get a marginal new low in October. So just still got to respect, even though we had a little bounce here. That little bounce is sort of nothing out of the ordinary. It's actually, if anything, it's actually it's more common than uncommon, I guess you might say. So
the one that we've just had in the last week, is it?
Yeah, that's right. Yeah, a little flashback there. So I actually sort of put up a chart there of the Dow Jones in that 2000 to 2002 period, which was sort of like the bear market low there. And pretty interesting chart there because the dates match up really closely with our low here. So 24th of July up into the 22nd of August. So we just had I think it might have been 19th, 20th of July up into the 19th of August high there, and had a bit of a sharp sell-off similar to this, and then a sharp bounce similar to this. So yeah, just I'll look through some of the other cycles as well, even the ones that sort of like 60-year, which made a sort of higher low. It had a few bounces in there as well. Probably maybe not as sort of sharp as that one. There was a few bounces there, which were more like sort of the pennant or flag sort of pattern, where they went sort of sideways for 5 to 8 days or something like that, and then they broke down. But yeah, a couple of them, the more bearish ones actually tended to come off aggressively, bounce aggressively, and sell off aggressively. So it's actually done, it's done the more common setup here. So I'm just nervous here that this might be the setup here. We've sort of had that sharp sell-off similar to this move, had a sharp bounce, and we might be at that point there. So yeah, I saw some seasonal stuff here around. I think it might have been Larry Williams actually had a seasonal trade there, which is around the 12th of September there, sort of the 12th of December sort of tends to be a bit of a seasonal high for US markets, and we've seen a few sell-offs after the 12th. So he's normally sort of short term, so looking at 2 to 4 day sort of time parameters. But yeah, there was a lot of weakness after sort of early to mid September sort of highs there into the end of September. So yeah, so it's just following a classic pattern so far. So look, there's nothing different here. It's just interesting we're running into the CPI number here tonight. So that is definitely going to be pretty important.
That's a good thing to look back on this roadmap that you've brought up a fair few times over the last few years, and using and overlaying that cycle that you were just talking about. We had the July lows, June-July rally to the mid-August highs, which you'd mapped out and called quite well.
Yeah.
And then highlighting this rally that we're having right now, we've seen it many times before, and quite often it results in, like you're also saying with Larry Williams, September being historically a poor performing month for both the Aussie and US market. So history's favouring it to come back down towards October on many different perspectives, isn't it?
Yeah, that's right. Look, if we get a low CPI number here, the market rallies, and then I'll be wrong here. But so far the cycle's been sort of pretty bang on, and there's nothing here so far which is different from any of these other cycles in the past year. So until we see something different, I still sort of have the view that we're sort of probably going to be a week into early to mid-October here. So